What's going on, guys? My name is Richard Moglen and welcome back to the Traderline channel. And in today's video, we're starting a new series, which I'm extremely excited about, where basically we'll be going back and studying the greatest performing stocks of all time and looking at what made them so successful, both from a fundamental and technical point of view. And we're going to kind of try to find some key takeaways that we can use and apply to the current markets and looking for the next true market leaders. So I hope you guys enjoy this video. Let me know your feedback on this new series and its idea down below in the comment section, and be sure to like and subscribe if you do enjoy it. And to kick things off with this series, I thought we'd talk about Apple, one of the greatest performing stocks of all time, and going back all the way to 2003, coming out of that bear market, which is pretty similar to the situation we're seeing today, where a lot of growth stocks have gone decimated, obviously here in 2022. And we're starting to look for the stage one bases to form and trying to basically find the next potential true market leaders. So I think we'll learn a lot from this episode. So once again, let me know what you think down below. And if there's anything that I missed throughout this video, let me know down below in the comment section as well. So first things first, let's take a look at a high level view of the overall uptrend and also talk through O'Neill's buy points as well as the notes that he has on this chart. So overall, this is the first kind of proper consolidation after the stock had restarted a stage analysis, stage 2 uptrend. And this is the first buy point that O'Neill highlights. And we'll actually take a look at a daily chart and take a look at what that actually looked like and how you could have entered that stock using entry tactics, as well as after identifying those edges. So overall, from that point, it has a nice respect for that 10-week moving average, as the greatest true market leaders do. We have a slight pullback to that moving average, but we reconfirmed to the upside, set up another base. We've got an add-on buy point. You can see how tight it was during these weeks. And let me actually zoom in here. That probably helps you see the price action a whole lot better. So here we have that respect for the 10-week moving average, big upside reversal bar that kind of shows the strength, the accumulation here, then 2 tight weeks and then explosion off the bottom, and then a bunch of weeks up in a row, really accelerating this move. This is almost a high tight flag type consolidation. Nice breakout, nice inside week here, then a breakout to the upside. You've got an add off the 10-week moving average on volume, and then it pushes up once again, and then we see a more significant base where we do see a big distribution bar. Let's take a look at the volume on that day, and you can see that O'Neill has a note here: do not sell on this big volume close below the 10-week line. It was the first 2-to-1 split after the big run up, and it will correct later and then move higher, especially when you have 3 prior quarters with huge EPS acceleration. And also he's got a prior note here about the overall earnings increases that really drove this stock to higher prices, as well as, of course, the N and Can Slim, which we'll get to. They're kind of releasing a ton of new products, the iPods, as well as the Apple Music Store, right as this was kind of starting its move. So I think that's extremely important to note as well. This stock kind of matched the Can Slim template perfectly, especially with that N in Can Slim. You've also got a tremendous CEO, Steve Jobs, extremely innovative, and that really drove the overall price move as well. So getting back to where we were, we've got this longer term consolidation. It doesn't kind of close too far behind this overall high volume close on the weekly. And you see a little bit of respect here. We formed some higher lows, and we've got kind of an intermediate buy point, almost a double bottom type buy point here up the right hand side. And you've got an add-on point on these really 2 tight weeks, and then reconfirmation upside. Once again, 3 tight weeks. And here, if you take a look at the chart, a lot lower volume on those 3 weeks. And going back to where we were at, from this point, we once again see respect for the 10-week line. You can add off that area of support. And then from the add-on point, we see a nice trend above the moving average, and then a short consolidation, not quite enough to be a proper base, an explosion up, and then 1 week, which completely erases this prior up week's gains. And this to me looks like railroad tracks, which if you've read O'Neill's book, is a potential sell rule. And from that point, we correct, and I believe we correct about 50% overall. Obviously, Apple does kind of continue to innovate, grow its earnings, and continues to really progress from that point. But this was kind of the dramatic increase from that 2000 to 2003 bear market that we can kind of apply to the current times and try to use as a template to find the next huge winner. So a lot to be learned from this chart. I think the key thing is to wait for those proper buy points, look for stocks respecting that 10-week moving average. And even if you miss this first breakout, Don't be afraid to buy that stage 2 base breakout, especially if it's showing super strong accumulation and great respect for, you know, those potential institutional support areas overall. And obviously, O'Neill has said this a few times, focus on that earnings growth. We have huge earnings growth with Apple. And let me zoom back out so you can once again see that super strong triple-digit growth for all these different quarters, which really show the strength in the overall company. So that's a quick run through of the weekly chart. And we'll go into a little bit more detail, especially early on in its move and this first buy point, as well as talk through some kind of fundamental drivers that kind of pushed it off its lows after that bear market, which are pretty interesting. So first things first, let's go over to this MarketSmith chart. And this is back right at the first base, and the first buy point was right through this area that O'Neill identified. And this was earlier on as it was kind of pushing off its lows after suffering a pretty significant decline, obviously within the 2000 bear market. But this is the first time where it pushed back above the 200-day moving average on huge volume. You can see these big walls of blue here. And this area is actually pretty interesting. And we'll actually go into these dates and what was actually going on with the company during this period. So first things first, we've got a nice kind of longer term neglect phase where the stock was just kind of going sideways for 6 months or more. And then this day right here was when they reported earnings, or actually reported, I think they had the conference call on this date. And you can see that it dropped on very high volume, but from this point, pretty much respected that close and didn't want to fall too far below that. And even these huge volume down days, you can see it's kind of high volume without further price progress to the downside, which is actually a subtle sign of accumulation. And then it kind of pushed up here. And this date was actually when they made some announcements about the new iPods, some other products coming up. And on this day as well, where we see this huge push up on volume, kind of breaking above this entire range. This is also driven by a news event where we've got, once again, that N and CanSlim coming into play. On this day, they announced that they had over 1 million downloads from their new Apple Music store. So once again, that N and CanSlim is super, super important. And Apple was the king of innovation during this time. And that is really what led to this huge move. All those innovations that were taking place at the company. And that kind of led to this initial momentum off the lows that set up this first kind of proper consolidation when it had already started a nice stage 2 uptrend above the 200-day moving average. So let's actually talk through those fundamental drivers a little bit and look at what the news was like during both April and May of this year, of 2003. So on April 28, they announced the new iPods as well as the launch of the music store. And if you go back to the chart, it's actually really interesting. Right off these lows, we've got a little bit of a wedge pop right through this area. And this is the 28 right here. And that started basically that initial momentum move. And then, of course, on May 5th, which is basically this day, the huge move on volume. Let's take a look at what was going on in the news during that time. And you can see that the iTunes Music Store sells over 1 million songs in the first week. And they were basically hoping to do that over the course of the first month. So some rapid adoption here. The institutions were taking note, and that's what led to that huge push on volume off those lows. So I think that's extremely key here. And even if you don't buy it here or kind of notice it, when you see a type of stock and company that has those innovations, we see those signs of accumulation off the lows, and then it sets up a proper setup, a proper base within an overall uptrend. That's what we're looking for coming out of a significant correction. Once again, this was a company with a tremendous CEO. The N and CanSlim, the earnings were coming in, the sales growth was accelerating, all those key things that we're looking for. And basically all the greatest stocks going back in history share those key kind of characteristics. So you always want to be on the lookout for that. And with that said, let's now actually dive into the stock chart and talk about how you could have actually bought this stock as it was breaking through this first stage base. So overall, we have an initial cup shape here. We have a super strong push off these lows, kind of straight off the bottom. And you could, if you were really aware of the story or really liked the overall chart pattern, or you like to buy off the 200-day moving average, you could have bought right in this area as it was breaking through this downward trend line off that 200-day moving average, breaking through that 21 EMA and kind of wedge popping here once again, and then retaking that 50 SMA. This would have been another pretty decent spot off these lows. And let me also draw that in here. This down day, even though it's a big downside reversal, take a look at that volume on that day. And even this day right here, which is a super low volume, you can see how tight that is. Definitely signs of accumulation coming off this base low. But even if you missed it at this point and missed these early entries, if you're really focused on this name because of fundamental reasons, you had another bunch of chances here as it pushed up here, couldn't quite have the momentum to break out, and it basically forms another base, another consolidation, and chops around. This would have been a potential buy point. Most likely you're getting shaken out either on this day or this day, but it kind of pulls back to that 50 SMA, responds in a really strong way. And this really is where you want to pay attention to the stock. And NVIDIA actually had a pretty similar setup in 2021, coming up the right-hand side of a longer-term base of this, a pretty short but very tight handle on extremely low volume. So very constructive price and volume action. You could have bought it on this breakout through that level. We get a nice breakout continuation even through these pivots. And from here, we get an enormous push up here. If you're a swing trader, you can take some profits. But if you're trying to latch on to the longer term move, which Apple, of course, did ultimately have, you basically set yourself up really nicely with a low cost basis where you can kind of absorb these natural reactions where it respects that 21 EMA and progresses to higher prices. So I just kind of want to go through on the daily chart. I thought this was very interesting, this price action, coupled with the news coming out at the time. And of course, that first buy point I think is really important to go through on the daily chart so you can see how it actually would have played out live. So you can kind of look at that same thing and once again, apply that template to new opportunities in the market. This constructive action where we're respecting the moving averages, respecting that 50 SMA, and seeing that push up on volume after really tight action on low volume, that's something that works over and over again during every market cycle. So with that said, let's move on over now to TC2000 and take a look at the overall run of this chart on the weekly. So actually first taking a step back, here's the super strong run it had basically in the late 90s. Then of course, the destruction during the 2000 bear market, it enters a neglect phase for multiple years. And then this is the day where the iPods were announced, as well as the news about the new music store. And this kind of sets the whole thing in motion. And at this point, we're on a weekly chart here. So this is the 10-week in blue, the 30-week in red. This is where we kind of start an initial stage 2 uptrend. And then this is the first consolidation breaking through here within that overall stage 2 uptrend. So that's what we're looking for. Overall stocks just starting a new stage 2 uptrend as the market is doing so as well. So from this point, from that buy point, we progress well. We respect that 10-week moving average. You have some add-on buy points that we already went over. And let's actually just go ahead and zoom out and take a look at this run. And even though O'Neill kind of stops the chart here after kind of this 50% decline, you can see that Apple, of course, continued to innovate and produce some amazing technology. And it basically continues to be a market leader to this day, and basically becomes an institutional favorite and one of the largest market cap stocks in the world. But overall, this is where O'Neill ended the chart on the kind of railroad sell signal here after push up from this short-term consolidation. But overall, I think you can learn a lot from this chart in terms of price and volume action, respect for that 10-week during an uptrend, and also kind of how the fundamental news drivers kind of pair with the technicals and how you can look and find that accumulation that's really evident even before that first breakout. So that's what we want to look for in terms of new stocks emerging out of this correction after this bear market. And you want to look for that earnings growth, that N and Can Slim, new CEO, some other type of fundamental driver. And also, I think it's really interesting to look at how the price action pairs with the actual fundamental news events and drivers that were coming out during this area and are apparent even before the start of this first buy point, which was a tremendous entry into this longer term uptrend. So overall, I think there's a lot to learn from Apple that we can apply to the current situation to try to find the next true market leader. You want to look for that N and Can Slim, earnings growth, sales growth, new and innovative products, as well as, of course, super strong price action and proper buy points. So with that, I hope you guys enjoy this video. Let me know as well what stocks you'd like to see next. And once again, if you enjoyed, go ahead and leave a like down below, subscribe if you're new to the channel, and I'll see you guys in future videos. Thanks.